Friday, September 12th. Market analysis, Stan Ehrlich. I start out with stock indexes, go to futures, and several stocks usually. Now, it's not that I don't expect, and I do, that we're going to have a significant decline into October. The odds are very high that that is extremely likely. And I am looking for sell signals in any way, shape, or form. Today, we got overbought in the MES for the first time in a month and a half. A warning that we're getting close to a turn back down. But a relatively small range and a close approximately unchanged, down just a tiny bit, doesn't give me a sell signal. It just says overbought. Be careful. I wouldn't go long up here. I'd be looking for sell signals. And the same thing goes to the 5-minute chart. Opened relatively steady, had a little bit of a dip, managed to make new highs that didn't hold, and came back to close slightly lower. As you would expect, the S&P is extremely similar, the SPY, but it was overbought yesterday and got a little bit more overbought today. So, same commentary. Looking for sell signals. I realize this is all-time new historic highs. Yeah, they always top out someplace at some point. Next, 5-minute chart. Same story. Managed to make new highs, couldn't really hold it. Closed a tiny bit lower. QQQ, overbought. Now that's pretty much everything so far on a daily data chart. For the first time today and the first time in a month and a half, conditions are ripe. No sell signal yet. QQQ, overbought. Whoops, we go to the 5-minute chart. Managed to do basically the same, but it did get stronger quicker and did close higher. So that's another new historic high with a higher close, but still overbought. And the NQ got overbought. That's pretty much everybody. We'll see about the Dow and the MES in a moment. And did close on a firm note in new historic highs for the first time in a while. So, warning. Now, the 5-minute chart shows an opening and quite a while before it popped into new high ground and stayed there on a rally on the NQ. YM, not overbought at all. Didn't even come super close, up to 70 instead of 75, like I like. And is in a significant resistance area right around where the market topped out before, going back to November of last year. So, and that was yesterday. Today, we couldn't make and didn't make any new highs, and we simply had a doji with a lower close, quite a bit. There is support around where today's low was, all the way down to approximately the low of September 2nd, which was the bearish engulfing. It did not work. But they're oftentimes part of topping out time frames instead of the highest high or the lowest low. We love it when they're, on the exact high and low days for weeks, if not months, and many months in some cases to come. So, resistance stopped the rally, but it wasn't because it was overbought, just simply a resistance area. Still, a minor reason. I'm not turning bearish yet. Next, simply the 5-minute chart simply started to slip and kept on going, much dissimilar than the Qs, of course, and the E-mini, S&P. Now for the 5-minute chart on the Russell. Just a moment, going back to the Russell. Where's my Russell? Just a minute. There we go. Daily data I should unsqueeze, but we're in this ballpark where it's topped out for the last few years again. And it was almost overbought a few days ago, but not quite. Last time was August 22nd, 3 weeks or so ago. but the progress has been steady and slowing a little bit. No reversal, nothing significant, just basically in overbought conditions. I'm sorry, in a major resistance area and almost overbought. So not very good reasons yet to go short. And now we go to bonds. Overbought conditions for the last 5 days, including today. Today was not, for the first time in a bit, a higher high, and it did make a lower low than yesterday, and it closed significantly lower. This could have been it. Yesterday's high could have been a turn. How much? Well, maybe only down to 115.23 where the support really begins. And it can't rule out even lower than that. I would think 113, but we'll see. I can't be very bearish. I'm just a little bit downside reactionary because of the overbought condition. Otherwise, the high of the rally was not particularly at a spot that I would have thought it would have stopped at. I am still basically looking for a move up to 121. Next, notes. Overbought condition yesterday after a new high and a firm close, but we did have a bearish engulfing that didn't work. About, what was that, Tuesday? Overbought conditions in general, close to a resistance area, but not quite. We could be starting a little bit of a dip, starting to come down to 112.22-ish, 112.13. And then after that, you can get down to 111.22 and even 111 flat, or maybe 06. So a couple of different levels on the way down. Nothing major. Period. Let's go to grain. Crude, heat unleaded. We have an outside down day, bearish engulfing in crude, which implies that support area is going to be tested a little better than today's lows again, and we'll see if it holds or not. Now, this bearish engulfing could be enough to push it down on a close below 60.90, and especially below 60.20 or 30. If that happens, then you've broken below support, and you could drop off a lot more, all the way down to the low 50s. So, can we break support and start trending lower is the question. I think it's very possible. I would think there's a better than 50-50 chance. We're hitting a little bit lower level on natural gas. That rally high, when it got overbought for one single day, seems to have been the rally high that turned it back down like I was hoping for and mentioned. This head and shoulder top formation I've been talking about for months has a minimum downside objective about 1.3, and that's where I think it's going. And I've been saying that since June. Next, heating oil. Rock in a hard spot, really can't come to any conclusion. Support could hold it again. Not near oversold, not near overbought, nothing there. No signals, I have to wait. Gold, overbought, no upside downside progress of any extent, slightly higher close. I think it's topping out for correction back to support, and that would more likely than not be 35.35, 35.36. Next, new high close overbought conditions again. We've had it 2 or 3 times in this approximate price range in the last week and a half. I wouldn't run after this thing on the way up. I would think that we would be seeing a rally high here very soon and a correction back to the first decent support area, which isn't very far down at 40.40. Maybe a little more likely would be 39.50. And then we'll see. Platinum. Looking for a rock and a hard spot to be broken. Resistance above the market got overbought, stopped it on the last rally. If it gets there, it could do it again. We're not close to overbought yet. Support, we've got a couple, 3, 4 of them below the market. So if it does start to dip a bit, I wouldn't expect necessarily any major downside breakout yet. So I'm waiting on something for platinum. Copper, after the crash, managed to make a new high and a new high close yesterday, and another new high today, but a lower close. I can't get excited about this. It might creep its way ever so slowly higher. No downside breakout, no upside breakout of significance or follow through yet. Neutral. Soybeans, very strong rally today. New high for at least a week and by a sizable amount. You know I've been trying to be bullish on a long-term basis in the grain complex. I like what I see in terms of long-term. It's a couple of years, actually, a year and a half, a little over a year, on soybeans, with 4 major lows approximately in the same price range. You could call it a quad bottom, but there's no such pattern. Triple bottoms are very rare to begin with. And if you like the 2 lows and they're separated, maybe a double, but bottoming out. The key here is to close at a very bare minimum above 1063. Then we've got a good shot at 1075 3/4. Above 1076 on a closing basis should be enough of a major breakout for several months in order to pop through new highs for over a year. That would be a major long-term breakout with an upside objective in the ballpark of 1230. Nice rally also for 2 days in a row now in soybean oil, which, remember, did have a head and shoulder bottom. I'm going to put that line back just to see what we would be doing. Yep. Okay. I'm going to leave it right there. For a couple, 3 days, it was below the neckline. Not good. Usually a reason to abandon the pattern completely. But now that we have run in 2-day period from the lowest low of the dip up to above the previous neckline on a closing basis, and almost all of today's price action is about the neckline or above, maybe the pattern is still good. We'll see whether this resolves itself next week or not. I'd like to stay here and higher in order to bring back the head and shoulder bottom story. All gaps are closed. That finally happened fairly accurately. Support wasn't, except for the neckline, broken. I'll see. I want to turn bullish again. I think I should be. Next, we've got basically a doji with a little bit higher close in soybean meal, but at least it bottomed out a couple of weeks ago and has come up some. I really want to close above 300. Yeah, that'd be good. And then it would be starting to chew up into resistance and make a new high for 2 months plus. I think that's very probable. Next, corn. Wow, a new high since mid-July on a closing basis with a big price range, probably big volume also. Intermediate short-term breakout to the upside. There's a gap to close I've been talking about almost every day now for weeks and weeks at 440.5. So we're getting closer. We're at 30. So I think that's going to get done. Now the question is, once the gap is closed, can it keep going up into major resistance, have the usual short-term downside corrections, and then make new highs again? We've got something going on a long-term basis. We do have an ER buy signal almost at the exact bottom of the market. It was before the rally started. Next, nice rally for wheat. Nothing there, just simply a little bounce. Maybe you want to try to call this a double bottom. I would say a stretch. Let's see if it can get above 535. Okay, stock, Shell, dropped off a chunk, testing support, not very good support, so-so. I do think it's quite capable of coming back all the way back down to, say, 69, 67, 67, 66.90. But we got to start closing below these lows, below 69 or below 70 flat. $1.30 lower. Not that much. Next, A little pop-up, and it closed the gap. Yay! Told you the gaps are almost always closed. Talked about it the last couple of days since it gapped down. That's history now. On the way up, it gapped, and on the way down, it gapped across the same space, and now it's all done. Back and forth, both. This is Apple, and I think now that the gap is closed, we should be looking for lower levels. Closing below the recent low on Wednesday at 225.90-ish will do the trick for me. Then it's going to drop off even more. Tesla, big pop-up, and it gapped up slightly above recent rally highs since March. Normally very bullish, but I don't like the fact that it's at 85 plus on the RSI scale, which is getting toward my screaming point, 90. And if it gets to 90, I think it's way too much, way too fast, and is likely to turn around and come down super quick, and no time to spare and no strength and price left. But it's not quite there. We're getting close to making that kind of statement. Now, it depends totally on how it closes this gap and how the support area holds as to whether we're going to see a big move down or just a move back down to support. But I think we're about to have that move back down to close the gap. Support. Next. NVIDIA still has a gap to close a little bit lower level. I think it's heading there. Back to the E-mini. You guys have a great day and profitable trading to you.